Very important announcement. CNBC TV 18 conducted a mega poll which included 60 top CEOs and covers 15 sectors to find out the India Inc. opinion on the state of the economy on the eve of the monetary policy. Prashant Nair is here with the key findings of that CEO poll. Prashant.
Thanks very much, guys. Lata and Anuj, good morning. So this is, as you said, a big poll. 50 CEOs polled across sectors. And, you know, the sectors basically cover both ends of the market. I mean, you know, the smaller sectors and, of course, the larger sectors as well. Take a look at the sectors covered: infrastructure, energy, textiles, cement, metals, autos. I mean, you name it. We have representation from CEOs across these sectors. Let's get straight to it then. The first question that we actually put to these CEOs was this: is financial year 17 a better year for Indian corporate sectors compared to the previous year? That is, this year, is this turning out to be better by the end of it than the last financial year? These are the results of this poll. 80%, an overwhelming 80% of the 50 CEOs that we polled actually replied in the affirmative. They said, well, yes, financial year 17 is a much better year as compared to the previous one. Only 20% said that no, this year is actually not turning out to be better than the previous year. I mean, you know, in terms of dissection, of the 20% who said that no, the reply to the answer was no, you had those, I mean, about 50% of that 20% coming primarily from the so-called chronically stressed sectors: infrastructure, steel, metals, energy, etc. The second question that we put to the CEOs is essentially this: is deflation over for corporate India? You know, deflation essentially can be described as price fall along with anticipated price fall in the future as well. And these are the results of that particular poll. 60% said, well, yes, deflation is over for the corporate sector. 40% replied, no, deflation is not over for the corporate sector. Again, I've got some disaggregated numbers, but we'll get into that in the discussion in just a bit from now. The third question we put to the CEOs, 50 CEOs, was this: do you think high cost of money is impeding growth? Well, I would say, in a way, predictably, the bulk of the CEOs poll, but not an overwhelming majority, but 64% said yes, that the high cost of money is actually impeding growth. There you go. Only 36% said, well, that is not a problem. High cost of money is not a problem. Tomorrow is monetary policy. We asked them, how much can rates fall in the next 12 months? Not in the next policy or the policy after that, but over the next 12 months. How much do you think interest rates can fall? And these are the results. And this is interesting. Take a look at this. 50 basis points, essentially up to 50 basis points. 44% said, replied that, well, rates can fall up to 50. Between 50 and 100 basis points, 36%. 100 to 200, 18%. And over 200 basis points, only about 2% of CEOs. You know, in a way, kind of showing that expectations maybe are very nicely and finely anchored. Okay, let's move on to the last question, the fifth question. And I think markets will be pretty clued in and glued into this, the answers to this question. What kind of profit growth do you see in the next 1 year for your sector? And these are the answers which actually we got. I should start with the contraction number. 6% of those polled actually saw a contraction. 26% of those polled said they see profit growth between 0 and 5%. Another 26% saw profit growth between 6 and 10%. 18% saw profit growth between 11 to 20, and 24% saw profit growth over 20% or so. I mean, so just kind of dividing these, all these numbers, these 5 responses into 2 broad areas. So 42% expect over 10% profit growth, and 52% expect profit growth in single digits. So, I mean, that's essentially the CEO poll for you. 50 CEOs across industries gets you a pulse of what CEOs are thinking out there in the economy. Back to you, Lata.
Thank you very